Welcome back. Well, the SGX Nifty is approaching a 200-point sort of move. In fact, it's up 200 points, 16,540. We are in for a massive gap up. This morning, it was up about 120, but I think this additional 80, 90 point is because of the move announced by the government. That is the big story. The government has announced a cut in the windfall tax on crude oil and also has slashed duties on fuel exports from SEZs. The new rates come into effect from today. R.S. Sharma, former chairman and managing director at ONGC, and Devin Choksi of Kia Choksi Securities now join us. Gentlemen, good morning. Thanks a lot for joining us. Mr. Sharma, your thoughts first. It's a bit of a relief, but the worry is that there's always going to be a bit of an ad hocism about it from here on. But your first thoughts on the measures taken overnight.
First of all, thank you very much. And you can make out from my smiles. And that smile indicates, I can say, the mood of the industry itself. This is a very much welcome news, because when this 2 weeks back, this windfall tax came as a, shocker. And this was the entire industry was very upset. But this is certainly everybody would welcome it. I quite agree with you. This ad hocism is, if this can be removed, that takes me back to the memory lane when the crude prices had gone to $140 plus $147. That time, the government had constituted a committee, Dr. Kirit Parekh, Dr. Suman Berry. I had given a presentation there, and I had suggested, instead of ad hocism, instead of asking the upstream company to give ad hoc discounts to refineries, make it a transparent process. And again, instead of percentage basis, make it a calibrated mechanism. Higher the prices, you take higher, tax from ONGC. When the prices come down, the percentage itself should come down.
Got it.
So that perhaps would be a more transparent thing. But as it is, I'm sure this news will be give a lot of smiles to the industry.
Absolutely, it will. Absolutely, it will. I mean, it's a positive, absolutely no doubt about it, at least for the near term. Devin, good morning. But how do you approach the stocks? And let's address the big one first, Reliance, because that really is the one which impacts the market. We had that big decline, but for last few days, the stock was consolidating around 2,400. What do you do with the stock now?
Good morning, Anuj. Well, I think the views do not change overnight, and I think this particular subject of adjusting the windfall tax and the duties will keep continuing, I think, every fortnight as the government has announced. So I think there is no point, I think, debating too much on this particular aspect. However, as far as I think Reliance is concerned, probably I think if you look at, I think, numbers, the last year, probably I think they ended up generating an average around $9 per barrel kind of a refining margin. This year, as it looks like, I think it is still first quarter over. I think we are in second quarter. But as it looks like, I think they should be reasonably at a higher level. I think somewhere in the vicinity of around $14 to $16 to a barrel kind of a refining margin they should be expecting in the current financial year. In this kind of a situation, I think even after considering all the windfall tax, etc., I think if you are having such a large amount of jump in your refining business, probably, I think the amount of money on the beta front, I think that you'll be making would be somewhere on close to around 55 to 60,000 crores of rupees on an annualized basis alone from the refining business. Yeah. From another point of view, look at it, I think the windfall tax related issues. On the other side, I think you are having the oil and gas production, which has increased, and probably I think that is likely to result into a significantly large chunk, I think, which will get validated in the result in this particular quarter. But I believe that I think between $2 to $3 billion kind of a contribution would come purely from the oil and gas business itself. So these two businesses, particularly from the conventional segment, the refining as well as oil and gas production, I would think that Reliance probably should be reporting relatively much more handsome numbers. This particular the adjustment of windfall tax continue on a quarterly, on a 15 days basis, I think, but still I believe that I think these particular numbers are likely to be much smarter going forward in the current year.
You know, the point is that even when this was imposed on the 1st of July, if you took the earnings impact, on GRMs, etc., the fact is that street estimates were much higher, even after taking into account the impact. So actually, in terms of estimates, nothing really changed for the street, although it did put a cap overall. Mr. Sharma, just two other points. One is, I mean, we reported yesterday that gas also may be brought under the ambit of this. There's a proposal which may be considered. So far, that's not been the case. I remember, going into the April decision, when prices moved up from $3 to $6, there was some expectation that because of the very sharp rise, the government would do something then. They did not. That is one. Does it kind of, how does, if it were to come to fruition, that is, gas also is brought under the ambit of a windfall tax, how does it change things? And second, the other proposal being considered is moving away from a daily change in fuel prices, petrol and diesel, to a weekly, fortnightly, bi-weekly kind of a system, bi-monthly kind of a system. Your thoughts on both those aspects? Mr. Sharma.
Yeah. Firstly, gas to be brought under windfall tax, perhaps I have said earlier also, there's no case for that. Historically, ONGC, I know, has been having heavy losses on the gas business. It's only when the APM prices got substantially increased last time, so ONGC was able to break even on that. But absolutely, there's no windfall on the gas price for ONGC Oil India. Deep water, again, there the prices are high, but the costs are, again, the multiple times they have actually cost of production, capex investment that needs to be depreciated. I see absolutely no case for windfall to be levied in India over the gas prices. Again, thirdly, the gas prices in India are a fraction of the international LNG prices. So, whereas in case of oil, they are international parity prices. So I see no reason, no justification for gas to be brought under windfall tax. Second, again, instead of daily changes, we know daily changes has not been happening for quite some time. So I will always bat for transparency. So instead of daily changes, if the government says weekly, fortnightly used to be the scheme earlier, that is more transparent. Of course, there the refinery companies, they incur inventory losses or inventory gains. But weekly changes would surely be welcomed by everybody. At least it will be known that prices will be moving this way. Consumer would be happy. They would be knowing rather than going to the pump and then get to know what is the price today. Yeah. So that's a welcome.
Okay, so you're saying that this is a welcome move, and the fact that there could be weekly changes is something that, it's a welcome move, but still there is ad hocism, right? That could lead to some degree of uncertainty, especially for the PSUs. But Devin, for a company like Reliance, how do you read this? Is it a relief that the tax is cut and, now, of course, you can focus more on the core earnings? Or do you think that because of this ad hocism that Mr. Sharma was speaking about, there could still be some cap on the stock gains?
Well, I don't know. I think because on one side, the Reliance is largely focusing on, I think, exporting their refining products. Even after the windfall tax and the duties, I think still their products are being sold, and I think the export market significantly higher. And the domestic sale, I think, is definitely, curtailed, even though I think it is there on gas stations, but it is still curtailed. So from that perspective, I don't think that too much of impact is being seen at this point of time as far as something like Reliance is concerned. I would rather like to focus, instead of focusing on one particular aspect of windfall tax, I would rather like to focus on the overall format of Reliance. On one side, oil and gas production is increasing for Reliance, I think, which is going to contribute significantly from this year onwards into the balance sheet. On the other side, I think they are going to have higher amount of gearing margin from the conventional business portfolios. I think so that is definitely, refining products are definitely going to help Reliance in the current year. Geo is growing at around 20 to 25%. I think this is one area where probably you are likely to see larger amount of contribution. So I would rather like to see the company much more holistically than looking at purely from the point of view of windfall tax.
Okay, Harshvardhan Dole of IIFL is also joining us in this discussion. This, of course, is our big story of the day. Harshvardhan, good morning. Thanks a lot for joining us. So this comes as a big relief, right? And the expectation was that it will be done on a fortnight basis. So the market was in some way expecting it. But your first reading and how would you approach the big stocks like Reliance?
As you rightly said, it's a sigh of relief. Certainly for companies like ONGC, OIL, you know, after the fall in or rather moderation in oil price and $40 tax, the realizations were actually falling on a YOY basis. And to that extent, there is some sanity to the numbers that we are trying to forecast. I think $75 per barrel is a reasonable, assumption to work with now. It appears to be. In case of RIL, based on our assessment of the notification, I think even the SEZ refineries are exempt from the tax, and that should actually bring a significant relief, for RIL. Because if you were exporting, from SEZ refinery and yet paying taxes, that was quite deleterious. And to that extent, despite the collapse in spreads and Singapore refinery margins, now the earnings risk for RIL appears to be much more tempered down. And to that extent, while there is no earning risk, I think all eyes on will be on the results as well as the AGM and how things unfold thereof. So I think the downside seems to be fairly limited now for RIL, ONGC, and OIL. I think upstream will be driven by what happens in the AGM and how the oil price moves.
So,
yeah,
sorry, just one follow-up, Harsh. How does this reflect in the stock prices? Because, there was a significant drawdown that happened when this news flow came through. Today, of course, there'll be a relief rally, but is that it? Or do you think that, now that there is more clarity on which way the taxes are going to be approached, a weekly, perhaps, a change, the stock market will remove this uncertainty out of the way into these stocks?
See, I think one positive takeaway is the government has been pragmatic and tried to address the situation as soon as the things have come under the control. For example, oil has moderated, spreads have come down, they have cut down the export tax. And to that extent, there seems to be some thinking within the government that you should also try and address the concerns of minority shareholders. And that, to me, will be taken quite positively from whatever has been happening in the last, 2 to 3 weeks. Having said that, earnings visibility still is extremely poor. The way Singapore refinery margin has been moving and the way oil prices have been moving, it is tough to take a call on near-term earnings. And therefore, investors will take a call on earnings based on normalized earnings, normalized assumptions. Say a $10 to $12 Singapore refinery margin still will imply a good 15% upside in RIL. And ONGC, of course, at say $75 per barrel is still trading at below 4 times on FY23-24 earnings.
Right. Harshvardhan, just the other points on what I put to Mr. Sharma, which is gas being brought potentially under a windfall tax regime, for oil marketing companies moving away from daily price revisions. Although, I mean, it was not as if daily price revisions were happening. Prices were static for a long time. And then, of course, there were large adjustments being done. But how would you read both those?
See, in my opinion, the gas companies or the E&P companies producing gas, if they are brought under this windfall tax, definitely there will be a downward revision in the earnings. And to that extent, the stocks may not materially move from here on. But having said that, these are trading below 4 times. I mean, a large company like ONGC below 4 times, to me, these risks are partly there in the price. So I think rather than looking at earnings, people will start looking on historical price to book value multiple basis with these companies are trading at a decadal, low multiples. So to an extent, these risks seem to be in the price.
All right, Harshvardhan, thanks a lot for joining us. Mrs. Arish Sharma, thanks a lot to you as well for joining us early morning and discussing this important topic.